Hello traders, let us take a perspective on how geopolitical events affect movement of currencies in forex markets. If you take a look at this crude oil chart, you will notice a significant gap in oil prices. That gap occurred as a reaction by financial markets following the conflict between Hamas group of Gaza and Israel that started on 7th of October 2023. First, I would like to remind you that the forex market is the biggest and most active financial market in the entire world. Every day, there are many participants from all over the world engaging in trillions worth of foreign exchange transactions. So when you are trading, you have to keep your eyes on any information that could point to potential currency fluctuations that may arise from events occurring in various corners of the world. This is because such events can have an immediate effect on exchange rates and currency values all over the world due to the interconnected nature of the forex marketplace. Geopolitical events often introduce uncertainty and volatility into currency markets, making them a crucial factor that you should consider when trading or investing in forex. These events encompass a wide range of political, social, and economic occurrences that can create uncertainty and influence investor sentiment. Let's take a detailed look on how geopolitical events affect currency movements. Some of the critical areas that are most affected and that you'll be looking at include energy prices, safe haven demand, interest rate and policy changes, sentiment-driven markets, trade relations and tariffs, and economic impact, amongst others. So we see that on safe haven demand, geopolitical events bring about uncertainty, which often leads to increased risk aversion among traders and investors. In times of conflict and crisis, investors often run to safe haven currencies that are usually considered more stable and less prone to depreciation. The US dollar, Japanese yen, Swiss franc, and to some point gold are popular safe haven assets where traders or investors run to. These currencies tend to appreciate during geopolitical turmoils. The next area is risk currency depreciation. Risk currency depreciation. You note that currencies from countries directly involved in or heavily impacted by geopolitical events can face heightened depreciation during times of crisis. For instance, when a country faces political instability or conflict, its currency is likely to lose value or to depreciate in value. As a forex trader, you should be aware that emerging market currencies are particularly vulnerable to geopolitical events. This is due to their higher risk profile. The next area is on interest rates and policy changes. We note that during times of conflict or crisis, central banks may adjust their monetary policies in response to geopolitical events. These changes in interest rates or quantitative easing program can have a significant effect on a country's currency value. In such a case, you may have the currency value rising in price. On the other hand, central banks may respond to geopolitical turmoil by cutting interest rates so as to stimulate economic growth. Such a decision will often result in depreciation of the currency. Then there are trade relations and tariffs during geopolitical events or as a result of geopolitical events. So they mention in that trade disputes and tariffs are often driven by geopolitical factors can disrupt international trade and influence the value of currencies. When tariffs are imposed or trade relations deteriorate, it often leads to currency depreciation. A good example is the US and China trade tensions, in which case these tensions, which are a prominent example, have shown how tariff-related geopolitical events impact currency movements, with the dollar and Chinese yuan being a good example. Then there are impacts on energy prices as a result of geopolitical events. We note that geopolitical events in oil-producing regions can have a significant impact on the value of currencies. This is especially so for countries that heavily rely on oil imports or exports. An increase in oil prices as a result of geopolitical tensions often leads to higher import costs for oil importing countries. This often leads to depreciation of the currencies. So the next area that we'll be looking at is the intervention by central banks as a result of geopolitical events. And it's worth noting that central banks may intervene in forex market to stabilize their currencies during times of extreme volatility as a result of the geopolitical event. They may buy or sell their own currency so as to influence its value. For instance, the Swiss National Bank has intervened in the past to prevent excessive appreciation of the Swiss franc during financial crises. Another area that is often affected by geopolitical events is a matter that pertains to sentiment-driven markets. Or rather, we often experience markets that are driven by sentiment or trader sentiment that usually occur during such times. We note that geopolitical events can drive sentiment in forex markets. It's natural for forex traders to react to headlines and developments from various regions of the world relating to the crisis, which often leads to short-term currency volatility. However, we know that as a forex trader, you have to bear in mind that the impact of geopolitical events can be temporary, with the market focus often shifting rapidly as new events unfold. The final area we look at is the economic impact as a result of the geopolitical event. We note that Geopolitical events can disrupt economic activities, affecting trade, investment, and economic growth. These disruptions often have a lasting impact on a country's currency. Economic sanctions and embargoes imposed due to geopolitical conflicts can reduce a country's access to international markets. In such an instance, this is likely to affect the value of its currency to a great extent. If you are trading the forex market, you have to be aware of the economic impact that results from such geopolitical event. So we conclude by mentioning this. Geopolitical events have a profound influence on currency movements, and their effects can be complex and versatile. As you participate in the market, you should closely monitor geopolitical developments, assess the potential impact on currencies so that you can adjust your trading strategies accordingly. Thank you for watching. Let us meet again in our next video as usual.